All right, welcome back. Our last presentation of the day. Y'all excited? All right, it's going to be a good one. Fraud detection, prevention, think big, start small. Our instructor is Greg Clapinski, and he's been with the Louisiana Legislative Auditor's Office for more than 23 years and currently serves as senior manager in the investigative audit section of our office. As manager, Greg is responsible for supervising and performing investigative audits of state and local government agencies and quasi-public entities. Investigative audits are designed to detect and deter the misappropriation of public assets and to reduce future fraud risk. Greg has a degree in accounting from Southeastern Louisiana University and is a certified public accountant and certified fraud examiner. Please welcome Mr. Greg Clapinski.
Thank you. Can everybody hear me? Even in the back, it's kind of weird looking up. We're usually this way or looking down, so it's kind of different for me. Let me kind of get through these slides here. Went over my background. It's actually 24 years. Maybe this time next year I can click it, update it, and do it 25 and get that much closer to retirement. So I'm looking forward to that. Okay. So first of all, the title of this presentation, Fraud Detection and Prevention. I'm not an expert on fraud prevention. I know a little bit. But that's not my business. My business is fraud detection, so we can go ahead and get the prevention out of here real quick. Design and implement internal controls. That's basically it. Basically, when we go into local government, we find agencies that don't necessarily have the resources, the means, or ability to design and implement strong internal controls. So I have job security, and we have a lot of work to do, and we have folks out there doing it every day. When I first started with the office way back when, one of the bigger things or one of the bigger challenges that we had sometimes that I had was, where do we start? We have a complaint. It may be something vague. It may be very specific, but where do we start? How do we get going? Are we looking for red flags? Are we chasing red flags? Are these red flags going to come bite us in the rear end and let us know what's going on? Or do we go through this planning process and risk assessment and financial statement analysis? So that was kind of the challenge for me. But it always kind of came back to kind of some red flags, not the typical red flags that we all hear about and talk about, and we'll go over some of those in a little bit. But it was more going into an agency, looking at their most basic records, and evaluating people's behavior within the course and scope of their duties. And those things, those simple things, those simple small things usually ended up into something bigger, and those were the red flags that I typically look at when I start, the fraud detection process. So now, when we do start talking about some of these red flags, some of them mean different things to different people. Internal audit, somebody that's employed by an agency. I see Tammy up there. She used to work with us, and now she's back in her old agency at the school board. Typical red flags, living beyond the means, people having financial difficulties. Those are things that internal auditors, internal folks tend to pick up on because they know the people in those agencies. They're watching, they're seeing. But as an external auditor, that's not always the case. We kind of go, sometimes we go in cold. We don't have a whole lot of information. So it's those other smaller clues, behavior, things that people do in the course and scope of their work that kind of tell us whether or not they're likely to have committed some sort of fraud. So it kind of comes back to who you are, where you work, what your objectives are. Looking back on my career, which that started in 1997. 24 years. There's a couple years where I actually left the auditor's office, but I came back. So it's been since basically 1997. I mean, back when I started, we would start with basically a simple complaint. And thinking back, I don't really even know where those came from at that time. One thing that sticks out in my mind was a senator or representative so-and-so called and said, you know, maybe it's the sheriff. They're getting a lot of complaints on the sheriff in his district or that parish or what have you. So at that time, we'd basically go in, not so much of an audit plan, but I'm gonna find out everything I can about that sheriff or that particular person in terms of what they do within that agency, how they're paid, whether or not they get expense reimbursements, whether they have a mileage allowance, whether they have a credit card, any of that kind of stuff. We'd pull all that documentation, and that would tell us a lot about that person and what we might find. Move ahead a few years, we had some management changes, and then Hurricanes Katrina and Rita. I think everybody remembers those. Those kind of changed the game for us. At that time, we kind of backed off on complaints, and we went out a lot to, you know, address some complaints, but a lot of times we were instructed to assess risk, find some weak spots, find things that they weren't doing right, and kind of help them. It was kind of more of a client-oriented type of approach at that time. Jennifer, you'll remember this. No, I got your reports. We weren't allowed to do that then. So that taught me how to assess risk, how to look at the agency as a whole. So now I'm growing. I got different things that I'm looking for. Then we had some new management changes, and we went into Medicaid fraud. And boy, that's a whole different story. So if you're talking about red flags, you're going to get some data with either providers or beneficiaries that meet some sort of criteria, and you kind of got to look at that information and pick your own red flags. So that was between Medicaid fraud and unemployment insurance during the pandemic. That was some very interesting work, and we ran into some very interesting characters. On the unemployment insurance side, we actually ran into some real career criminals, so that was very interesting. I don't want to do that work again, but I tell you, I did have some fun doing that. So fast forward to kind of the current state of affairs with Sheriff Wagaspack, who's now legislative auditor, and we're in a really good place. We're in a very good place right now. We're getting complaints. We're addressing complaints. If something else comes to our attention, we go and we get after it, and we look at it, which was kind of early on in my career. If we did go and look at a sheriff, well, we may or may not find anything. But if we didn't find something and somebody came back behind us and found something, that was the unwritten rule. We'd be in a little bit of trouble on that. So that's not much of a concern anymore. We're going through our complaints. We're getting through them, and we're finding the more correct red flags. So again, it goes back to who you are, who you work for, what your objectives are. Again, more of an internal audit, working within the agency, certain red flags, people living beyond their means, people with financial difficulties. You may see those, you may notice those, and that may trigger you to do something about it. As far as us, in terms of external audit, those aren't always as apparent. And to me, instead of chasing down those red flags, I'm looking for people's behavior within those agencies and what they're doing, how they go about their duties, how they do their timesheets, how they handle their credit cards, those type of situations. So, you know, one pretty good example of that was we went to an agency probably over a decade ago, and one of the issues was, or the actual complaint was, the amount of money that they were spending on insurance contracts and insurance policies. That's kind of weird. A lot of money spent on insurance policies. One of the issues was that they had a third-party administrator who was an insurance agent who was administering a self-funded health plan. Again, that's a little odd, but in planning and looking to vet that particular complaint, it was going to take a lot of work in that we would have to go in, we'd have to look at contracts, we'd have to look at policies, probably have to look at some payroll, we'd have to look at employee information, we'd have to get third-party records. So, all right, that's going to take more than a week's worth of field work. There was no doubt in my mind about that. So in the interim, the goal for me was to, one, figure out who might benefit within the agency, who might benefit from all these insurance policies and the insurance contracts. So once we identified that person, then it was a matter of, okay, how does this person handle their job? Is that person here every day when they're supposed to be? No, that person wasn't. That person was hardly ever there. So what does that tell you? It tells you a lot. It tells you a good bit about that person. Number two, was he being paid the right amount? No, he was being paid as an employee and a contractor. Well, there's something wrong with that. Speaking of pay, was he accounting for his time? No, somebody else was accounting for his time and all his leave accruals. So that was something that he wasn't handling as well. So all these things, and then you start going into their credit cards, their reimbursements, auto allowances, all of these things, we kind of add them up, and they're all bad. So what does that tell you? That tells you that those insurance contracts are going to be a big problem. And they were. The insurance contracts were a big problem. Other vendors, we branched out and looked at other vendors. We found out those were big problems as well. So it was taking all these little things and how people handled the small things, and we wrapped that up into the bigger issue. And the reality of it is when an auditor chips away at somebody over and over again on these different issues, you're eventually going to break that person, and you're going to find out the big issues. And that's kind of what we did. So to me, that was that think big, start small approach, and that's kind of where we were on that. Multi-million-dollar fraud in terms of improper payments to insurance company, improper payments to a different vendor. You name it, we had a little bit of it all in there. So that was that was what we looked at. It was, again, and for the slide, it was just looking at the bank statements. The most important thing that we ever do is get familiar with the bank statements. The bank statements, there's so much, if you really think about it, there's so much you can find out just by an agency's bank statements. There's probably 50 to 100 different things, if you really look and think about, that you can glean or learn from just looking at a bank statement. And then again, credit cards, expense reimbursements, timesheets, again, these are all little pieces of behavior of how people are acting, how they're handling their jobs. That kind of, those to me are the red flags that we look for. Okay, so moving on, don't need that slide. All right, so let's kind of talk a little bit about the red flags. So the ACFE, Association of Certified Fraud Examiners, every 2 years they come out with an annual, semi-annual report, or no, 2 years, where basically they compile information from fraud cases from their members. And they put together this report. I'm sure some of you have seen it, but it's full of excellent graphs, charts, all kind of different depictions of fraud, red flags, the type of frauds. And one of the things is 85% of all fraudsters display at least one red flag. So what does that tell us? Well, it tells us 15% don't. So 15% of the time we got to look off their list to see what we're dealing with. But the other 85%, or the 85%, there's something on their list that these fraudsters displayed during the time that they committed their crimes. A couple other things to keep in mind. 86% of all fraud schemes include asset misappropriation. So like I said, 9 times out of 10, we're dealing with assets, cash, basically. Median loss on these frauds, $125,000, and it generally, the average is it takes 14 months for these. So even if you have some controls in place, they're probably going to go 14 months before they're ever discovered. So then that begs the question, if it takes so long, to discover these red flags or these frauds or what's going on, and it gets up to at least $125,000. What's going to show up in these investigations? What are we looking at? What are we looking for? So let's look at some of the graphs. Don't even look at what's written on there. It's not important. These are from ACFE's report every other year. They have these graphs that say these are the behavioral red flags. What's on there is not important. All I wanted to show you here was that every 2 years is the same information. The charts are exactly the same. Give or take 1% every other year for the top two. It's the same every year. But again, are these the right red flags? Are these the red flags that are going to help us detect fraud? Again, depends who you are, where you work, and what your objectives are. Let's take a look at one of them more specifically. And again, this graph is no different than the other three that you saw on the previous slide. So obviously the big ones are living beyond means and financial difficulties. A couple things to consider when going down this list. These big ones are kind of common. Living beyond means, financial difficulties, some of the other ones that people really talk about or that get discussed, or divorce, addiction. These are problems that are common in America. So I don't know that these red flags in and of themselves prove anything. In fact, they don't. They may tell you where to look, who to look at. If you're an internal auditor, yeah, you might notice that somebody has a change in their lifestyle. Doesn't mean they committed fraud. From an external perspective, kind of the same thing. I probably don't even know. I don't even realize that they exist. But let's look at the first one, living beyond means. Is there a standard definition for that? I don't know of any. I haven't seen one. It's kind of, you kind of know it when you see it. I think that's the best way to describe it. Somebody who's living a lifestyle that their income probably doesn't support. That's probably what we're dealing with. And if you're living beyond your means, chances are that's causing you financial difficulties. So now we got both of those first two big ones to talk about. So another thing to consider is fraudsters aren't alone. They're people. They have families. They have wives. They have children. They have parents. They're not alone. If let's say the LLA had an internal auditor, and that internal auditor had been there for some time and knew me personally, knew how much I made, knew how much I worked, how much whatever. They kind of knew me. Now let's say I show up in a brand new car one day that would be totally out of character for me. What does that mean? Well, it may not mean anything. I have a wife. She works for the state. She draws a salary. Maybe she left the state and joined a law firm and got a big raise. I don't know. There's a lot of different possibilities there. Maybe I inherited some money. When we talk about financial difficulties, who doesn't have financial difficulties? Everybody in this room probably has had a financial difficulty at one time or another. And if they haven't, they probably see one on the horizon. I can name two right now. Kid one, kid two. Kid one, he'll be 17 at the end of the month. Kid two will be 14 at the beginning of next month. Financial difficulties. I have those. They're going to go to college soon. We're putting aside money, but I don't know where they're going to go to school. They could go to school out of state. There's other factors that go into that. I don't know where they're going to go to school. If they go to school in state, we'll probably be okay. If they go out of state, that's going to be a problem. I'm sorry, did you say something? No? So that's going to be a problem. But again, I don't know if it is at this point. Someday that may rear its head. I have no idea. I'm interested to find out, to say the least. So anyway, like I said, most of the time fraudsters, they have a family. Some of these things can be explained by families, some of them cannot. It's third, some of these red flags take a long time to develop, okay? I don't think anybody in this room, I could be wrong, including myself, I don't think anybody in this room could steal enough money from where they work right now to solve all their financial problems. Certainly not overnight, probably not within a week, probably not within a month. It would take a long period of time for you to be able to steal the amount of money you would need to take care of all your financial problems. So those are different things to consider. Again, internal auditors, some of these red flags may be apparent to you. Some of them may not. My thing is I like to focus again on the red flags that are based on people's behavior within their agency, how they're handling smaller parts of their everyday jobs. One of those would be, a little further down on the list of 13% is control issues. Well, I can go into an agency and observe whether or not somebody has control issues. Some of the records may reflect that. Irritability, suspiciousness, or defensiveness. Yeah, when I walk in the door unannounced, what kind of greeting am I going to get? That's always a very interesting thing to to try to figure out. Sometimes you're way off, and sometimes you just get your doors blown off. So, if you go down the list, refusal to take vacations, that's pretty apparent sometimes when you walk into an agency. If it's not, it's in their payroll records. It's in their timesheets. It's in their leave accruals. It's very easy to find. Excessive tardiness, absenteeism. Well, I have a note here to go to a different slide. I got my slides out of order. I always do this. Diane makes me be the creative person. She gives me a title, and then I got to create the whole thing, and then I create it, and then I say, oh, God, this is so stupid. Nobody's going to want to listen to this, and then I got to change it. So going back to tardiness, absenteeism, my favorite movie, one of my favorite movies, it's not sports related, it's probably my favorite non-sports related movie, Office Space. I'm sure everybody, most of the people here, I don't see too many real young folks that may not have seen it. The first picture on the eraser board, I don't know if you can see it, but it's planning to plan. And I just get a kick out of that. There's a whole flow chart about planning to plan. I love that because there were some periods at our office where we were required to plan. And then as soon as you walk in the agency, that plan blew up anyway. So it was kind of all for naught. But anyway, going back to behavior. So on the top, we have Milton. Milton has his red stapler. Most of us know that Milton probably stole the stapler from Lumberg, but chances are he's using it for company purposes, so I don't really have a problem with it. And then down at the bottom, we have Peter, who had an epiphany while his occupational hypnotherapist died while hypnotizing him. I think that's how that actually goes. So we got Peter. So is there any doubt here which of these two, just looking at the picture, would be more susceptible to commit fraud in the workplace? It's probably Peter. Peter gave the money back, and then Milton burned the building down and got the money anyway. So again, you never know what's going to happen. But I think everybody in here who's seen Office Space and worked in an office, you can relate to at least one of the characters, if not several, and have a moment where you're talking with somebody and say, I don't think I like my job. I'm not going to go anymore. And then the response is, well, are you going to quit? No, I'm just going to quit going. So I think we've all been there. So now I got to remember to go back. Okay, so back to red flags. This is another way that the ACFE shows these red flags. And the interesting thing here is, I'm trying to make this distinction between internal audit and people within an agency versus external audit. And that's what this is saying here. Recognizing the behavioral clues displayed by fraudsters can help organizations more effectively detect fraud and minimize their losses. So again, it's kind of some of these red flags are for, people within the agency that may may know or may determine or may see something that says, yeah, somebody in the agency is living beyond their means, or somebody's got financial difficulties. For the rest of us and external, we're just going to have to pick up on clues once we get into the agency. That doesn't mean we won't find people living beyond their means, but we're just going to have to find other ways to figure out what's going on and whether or not somebody needs to be a target of investigation. Okay. Any questions? Anybody want me to turn on Office Space and we can watch that for the rest of the? Believe me, if I knew how to put movies in here, I probably would. But as you'll see later on, there's a lot of technology that just drives me nuts. Passwords. That's our office. We have passwords for everything. So, interesting case. All the Queen's horses. Everybody pretty much familiar with this. I'm sure you are. I was at GFOA a week or two ago, and it came up a number of times. I don't want to go over this ad nauseum. I don't really know that much about it, to be honest with you. Largest municipal fraud in history. But what's talked about is this woman lived beyond her means for apparently 20 years. How did nobody determine it? How did nobody find out what happened? What was the issue? What did they miss? And so when it's talked about, my slides are out of order. So when it's talked about, it's, she uses money to purchase hundreds of horses. The garage that you can see, there's supposedly in one of those big bays, there's a multi-million-dollar RV that she used. She had stables constructed, barns constructed, and then you can see her trophy room where she has ribbons and trophies from all the horse shows that she won. So how did nobody determine this? How did nobody figure this out? Well, now let's go back to here. So as I said before, I really haven't paid much attention to this. I've heard about it. I've seen stuff about it. I haven't seen the movie. So I wanted to go on Google and find out, just Google Dixon, Illinois, and find out, what is this really all about? And if you put it in Google, then Google will give you some articles or something, or some videos. And I'll give you some questions that you can expand on, like how much money did she steal? And you can expand on that. So I just took that information, I pasted it in here. And so here's what we have. The city had 6 legitimate accounts at the bank. She would move money from other funds into the capital development fund, create fake invoices, and then move money to her own account. To hide the fraud, she collected all the city mail from a post office box and had a relative collect the mail for her when she was out of the office. So then you click on the response where it says, what did she get away with, or whatever it was. During the 2 decades of fraud, Rita purchased hundreds of horses, expanded her home, bought a home in Florida, and purchased a number of vehicles and motorhomes. So where's the obvious red flag? The obvious red flag is she was living beyond her means. She was using, she was purchasing horses, assets, capital improvements on her house, whatnot. Probably didn't comport with her salary. So that's the main red flag. Monday morning quarterbacking this thing, looking at it, to me, if you're talking about trying to discover a fraud within the 14 months, like the ACFE says most of them are, and within $125,000, at that point, she probably didn't have all those trophies. She didn't have all those assets. It took some time to develop. Now again, Monday morning quarterbacking this thing, I would have a problem with the post office box. What's the business purpose for having the bank statements or any other mail sent to a post office box? I don't know. I'd like to think that if I was auditing this city of Dixon in that first year, I like to think I would have asked that question. Now, if I did ask that question, it's probably going to go one of two ways. And the first way is, yeah, we're going to have a rational conversation about a legitimate business reason. And I can understand that. Is that likely? No, it's not likely. The second way is going to go is I'm going to ask about a P.O. box. And I'm going to, let's look at it from this perspective again. So if we look at the red flags, yep, first one checks the box, living beyond means. I'm sure at some point that created some financial difficulties. Yeah. Go down, obviously there were some control issues, right? She was controlling the bank statements. The bank statements were being sent somewhere else so that nobody else had access to them. So that's a control issue. So if I talk to her, and we go to that second option, we talk about that P.O. box, I'm probably going to run into the next item, some irritability, suspiciousness, and defensiveness, and I'm going to get some horse's ASS answer about why the bank statements are sent somewhere else, and that answer is probably going to be something to her benefit. It's more convenient for her. It has nothing to do with the office, the city. It's going to be for her. So that's, again, going back, I don't know if that's what I do, but my suspicion. What do you think, Tammy? We do that? We'd have a problem with the P.O. box? Sounds kind of silly, but what's the reason? Sometimes there's just no other explanation, and they can give you all the lame excuses they want, but there's really no good reason. So, any questions? Red flags, City of Dixon, anything to this point? Judith, do y'all have any questions? No? Okay. And so what, we got till 4:15? Okay. All right, I'm not keeping you from your families and none of that. Trust me. I'm gonna shut it down when it's time to shut it down. I know when I go to these things, I usually get off work at 3:30 every day. So when I get at these things and I go after, 3:30 starts coming around and I'm like, I gotta be out of here. I got stuff to do. I got kids to pick up. I got baseball to go to. I got swimming to go to. So I feel your pain. We're not gonna go over. So the thing that unraveled this was a family member of Rita Crunwell's went to the P.O. box to get the bank statements or whatever mail while she was out of the office. If she gives you that excuse, then the next response is, well, how often are you out of the office? Again, I'm probably going to be met with some irritability, suspiciousness, or defensiveness. And I'm probably going to get, well, I work my hours. I don't have office hours, but I get everything done, and they tell me when I get things done, I can leave. And then, anybody think she filled out timesheets? Probably not. Now, knowing that she didn't, I don't know if she did or not, but thinking that she didn't fill out timesheets, you think she still accrued leave and took leave whenever she needed to? You think there was any approval for any of that leave, or do you think she came and went as she? Again, has nothing to do with her living beyond her means, has nothing to do with financial difficulties. It has to do with how she handled her business, her job, how she handled the small things like timesheets. Probably didn't even do timesheets. So those are typically the red flags that I would look for being an external auditor. All right, so let's move forward a little bit. Anybody want to talk about Office Space anymore? It comes on so often too. It's like on TBS, TNT, Comedy Central.
Greg, I do have a question that came in.
Sure.
Do you have any suggestions for segregations of duties if it's difficult because the office is too small and there's small staff?
Yeah, I've talked about that before. it's kind of a you get whoever you can. Sometimes that's the Board of Aldermen. You may need to get them or council members. But otherwise, that's a big problem. I'm sure that's the number one audit finding in Louisiana. Diane, is that the number one? Yeah. So it's, and I get it. But I think getting whoever you can, people are going to probably have to perform multiple functions. If the mayor has to do it, the mayor has to do it. If the board president has to do it, the board president has to do it. And really, it's not that uncommon. We do see that quite a bit. Okay, so I don't have much time left. Good thing is I'm not going to get to the end of this presentation, but I'm going to get to use the rest of it for next time's presentation. And that's coming up next month, so I'm running out of ideas. This stuff is getting old to me. So what I kind of wanted to, what I envisioned doing was looking at these behavioral red flags from kind of the receipt, water utility fund perspective, and then go into, more of the general fund disbursements portion of it. I don't think I'll get to the general fund disbursements. I'm gonna save that for next time. But we can kind of go ahead and get into the receipt portion of it. So again, this is kind of getting back to how we get started. What do we look at? To observe behavior, to observe how things work, you either got to look at records and then interview folks, or you got to interview folks and then look at records. One of the two. I'm not the most personable person in the world, right, Tammy? So interviewing is not my strong suit. I like to look at bank statements. I love to look at bank statements, and I especially love personal bank statements. That is the best stuff. So I'm going to get familiar with bank statements and find out everything I can about what's going on in that agency based on their bank statements, and then I'll probably go into interviewing. Many years ago, I was paired with the senior auditor who I love dearly. He's since retired. We have lunch every now and again, but man, all he would do was chit-chat. Chit-chat. He sits somebody down, chit-chat, chit-chat, chit-chat. And I'm sitting there squirming because I either want to ask a business-related question or I want to get to some bank statements. And it just drove me up a wall. But we were good that way. So it was kind of a give and take. It was his strength and my strength, and we put it together, and we kind of had a good time. But again, going back to bank statements, going back to the example that I talked about earlier with the insurance contracts and all that, one of the first things I remember doing is looking at the bank statements for their operating account. And, you would run through there and you would see a bunch of payroll checks. All right, so now I'm looking at, without ever having talked to anybody, now I'm finding out who these employees are and what their addresses are. So then you kind of get through those, and you're going through the accounts payable checks. And now what are you seeing? Well, you're seeing payments to vendors with addresses that are the same as the employees. Well, that's probably an issue. And then you turn over the back of the checks, and now you're seeing endorsements on checks to payroll checks and contractor checks, the same endorsements. So that kind of just told me that, among other things, that this place was out of control, and it was. But anyway, getting back to, so if we get to these bank statements for, say, a water fund, utility fund, what have you, first thing I'm going to look for is frequency of deposits. That's going to tell me a lot. The next thing, we're getting into deposit detail. I'll go into detail on those two in a little bit. Transfers to and from general fund. That kind of gives you an idea of who's subsidizing who. If there's changes in who's subsidizing who, why? That's pretty simple there. And then what checks are written out of those accounts. I want to know if the water clerk, if she's being paid out of that account, or she's being paid out of the general fund, or she's being paid out of both, because that is more common than anyone can imagine. All right, so deposits. State law, daily deposit. Basically, whatever we collect, we're supposed to deposit the same day. Diane, is that a common finding? Daily deposits? No, it's not. It's a common issue. It's a common problem. Very few agencies that I've gone in make daily deposits. Now, whether or not that's ignorance, they don't know. I don't know. Could be laziness. But again, that kind of tells you something. Tells you what you're dealing with. If we're talking about daily deposits, weekly deposits are even worse, which we'll see in a minute. The next slide, it tells you a good bit. Daily deposits, if we're making daily deposits, it's likely we're reconciling our collections to what's in the drawer, and we're preparing a deposit. There's some sort of procedure there. That's probably what's going on. If it's not daily deposits, there's probably no procedure. Money's probably left unsecured. You're probably going to run into a lot of timing differences. There's going to be a lot of things that you're going to come into play. So just looking at that tells you quite a bit. So here's two from a particular water fund. 2 consecutive months from 2019. Frequency deposits right there, 2 deposits. Each month, 2 deposits. So that tells us, yeah, we may be dealing with lazy people. We may be dealing with people who don't have time. Is it really possible that they don't have time? They're only depositing in that 1 month $3,500. That's really not a lot of money. So when we projected this out over the month, it was pretty standard, 2 deposits a month, sometimes 3. I think the max was 4. Let's see if I can find. But if you notice in the first month, the total deposit is only $3,500, and the next month it's $6,300. Is that a problem? Is that our water? Is what we bill on a monthly basis in consecutive months different? That much different? No. So there might be something wrong. Now there may be a timing difference from when deposits were made. I don't know, but it certainly seems like there's probably an issue. Next thing I would look at is the actual deposit ticket. Two scenarios there. One is we have an amount for cash, and the second is we have an amount for checks. So we have currency, checks. Well, that's not a whole lot of information. That's probably the 2 times a month. Daily, you're probably going to see an amount for currency and an itemized listing of checks. You're probably going to see that. It should be the other way around, because if you're only making 2 deposits, you should have more time to itemize the deposits. But if the deposits are itemized, then you already know what's a normal amount per month. What's the average customer paying per month? You're going to see that. You're going to figure that out. And that's just picking up a bank statement, nothing more. So after we look at that, deposit detail. Chances are your agency is not going to provide deposit detail. Make them get it. Make them get it. Even if it's for a month, see what's in there, because here's what you're going to find. You're going to find traffic citation money in there. Now we got a real problem. Somebody substituting cash for these type of checks. I mean, they stick out like a sore thumb. The first check is from Saline, Louisiana. I redacted the address, but that's not the water department we're talking about. The amount of the check, $272. We've already looked. That's not going to be consistent with a month's water bill. It says traffic ticket in the memo. I mean, it's pretty easy to see. And then the next check's a money order made out to the parish of police department. So they don't even know that parishes don't have police departments. But the return address on that is Shreveport. We're talking about a little municipality way far away, which is probably somewhat of a speed trap, and they're getting people from Shreveport. Again, the amount. So, What's in the deposit detail tells you a good bit. What's not in the deposit detail may tell you something. The particular person in charge of all these deposits recorded, each month recorded that they paid their own water bill with a check. You think we found any of their personal checks in any of this deposit detail? No. Nope. Not a one. Not a one. Then on top of that, we had end of year bonus, we had payment of unused leave, so it kind of went on and on and on. And that's kind of how these things go. You find something small, you keep looking at other small things, and they all kind of build. They just kind of build on top of each other. Let me see where I'm at. All right, so when we're talking about these receipts, now we can probably get into some interviewing and talk to some folks. Talk to the people who are responsible for these receipts, these collections. And see, on one hand, if you have daily deposits, you have people doing the things right, doing the right things, you're just going to have a normal conversation. Tell me about what you guys do. And they're going to rattle off what they do every day. All right, then you're going to get into exceptions. You can say, well, tell me what happens when a customer comes in and their bill says that they still owe money from last month, but you paid. Well, this is what I do, and this is how we do it. And that's probably someone who's not committing fraud. Now, on the other hand, you get other folks that, well, things are either running too smoothly, so they never have any problems, they just do their job and everything's fine. That's kind of a red flag. Or the second one is they immediately start getting ahead of these lame excuses and all these different issues. And they start telling you about all this. Well, there's all these times when somebody paid their ticket online, but it never posted, so I don't know what happened. And collections were placed in unsealed envelopes, and it was left on a desk, and everybody had access to it. And that envelope might have got thrown away, and we don't always issue receipts. Sometimes we do. Sometimes all of these are lame excuses to spread out blame and point the finger at everybody but me. That's all that is, and that's all it does. So I'm running out of time. So then past interview, we're just going to pull some summary reports, see what's in those. Easy stuff, the non-cash transactions, adjustments. The thing that blew my mind is when one time a clerk was posting collections that she stole 15 years into the future. And it just blew my mind. Now what does that do? Well, that reverses the amount that person owes, so it's not going to show up on their next bill, but it doesn't show up on the daily report. So if I take that $50 and I post it 20 years from now, everything's going to match. And it just blew my mind. I was shocked. So you might want to run some reports that look at collections in the future. Always a good idea. But I think that's a pretty good, well, and these are just some of the findings that, these are findings we come across all the time, but it's basically looking at simple records, looking at simple behavioral clues, just the stuff we talked about. The coming up with finding is easy, determining the amount of loss sometimes, that's where the real work is. But really discovering some of this stuff is not really that complicated if you kind of know what you're looking for. And now that's kind of getting into the disbursements, and we don't have time. That's going to wind up being done in Baton Rouge next month. Any questions? I think we're out of time. Was there any other questions from the, no?
I'm not sure if you're going to know. For money orders, what if the money order is not signed? Can that be deposited, or is that something they need to go and refer to their bank on?
I don't know. I think if they probably stick it in there, it's going to get deposited.
Okay.
That would be my guess.
Yeah.
Especially in the small, smaller area with local banks. I'm sure that's probably going to get deposited. Any other questions? Everybody's ready to get out. I understand. Well, it depends what. Or investigate it. It depends what records are available and what they do. If they, we're still dealing with systems that give paper receipts. And then at some point later, that receipt goes into their drawer with the cash, and then at some point later, they either manually record it or they're recorded into some system. But it always depends on what, a lot of times what happens is customers will come in with that copy of the receipt, and we won't see any cash on that day. But that amount will be recorded within their system. So, and everything else matches up. So it just depends. Yes?
So we always write a receipt whenever someone pays cash, but a lot of times we'll get a check or a money order in the mail. Do you
Log them on a separate sheet? Yeah.
Because you're not going to send it out to anyone.
Right.
So, okay, just making sure we were doing what you expected.
Because we had that same issue in the Department of Health many years ago, and several thousand, 10,000, $95,000 checks were coming back from some of their Medicaid providers. They weren't logged, and the employee charged with that, she went and deposited those to a different account and pulled it out of the casino. Yes, sir.
Was an outside accounting firm involved at all over these years with this example of Rita?
I don't know. I assume, but I don't know the answer to that. There were audits.
And they got through all of that. And the auditing firm thought that they were in compliance and so forth. I'm assuming.
I'm sure their work product was well scrutinized afterwards and found to be very deficient. That would be my guess.
Look out, Anthony.
I have a question.
Sure.
The review of bank statements, disbursements. For electronic disbursements like credit cards, what type of documentations would you have to have? Like if you're making purchases and
I would expect to see the same type of documentation you have if you're writing a check to pay that credit card. You have the statement, itemized receipts, approved purchase orders in some circumstances. So I'd expect to see the same sort of documentation. Problem is, there's a lot of Amazon purchases. We run into a lot of Amazon purchases that are not documented. And we have to, people got to go back and redocument that because they just they use a credit card, purchase stuff on Amazon, and all we see is a charge. So that's one of the deficiencies. Nope.
I only have a statement. I just wanted to let you all know, like 5 of the things, the findings that you went over, one person in my agency did all of those things like 2 years ago.
Uh-huh.
And she basically got the agency out of $100,000. She did Aflac claims in some of the employees' names, and she switched on their account. She switched the bank wherever you deposit the money at to her account.
Okay. Yeah.
So it can happen. It happened like several things that you discussed. One employee did like 5 of them.
Yeah. Automatic deposit of payroll. When one person has that token and the ability to go into the system, into the bank account, and direct all those different deposits, that's been a big problem as well.
All right, and with that, I would like to thank everybody for your attention today. We sure hope that the sessions were informative and helpful to you in the work that you do. And if you are, don't forget for our CPE, we will be providing those certificates. It takes a while to validate all that stuff, so give us a couple of weeks to do that. Be sure to answer the survey. We hope that the strong among you will return tomorrow for 4 hours of intermediate governmental accounting. We're going to start at 8:30. We will
Enjoy
have
that.
plenty coffee. So have a good evening and safe drive back.